WNTN, home of Grecian Echoes, the longest-running Greek-American program in the country.
Well, it is 11 o'clock Eastern Time here in Boston. Once again, good morning and Kalimerasas. I'm Teddy Dimitriadis, and I'm joined right now by Mike Janity, who, by the way, will be taking over right at 12 o'clock with his disco program. But joining us on the telephone for our weekly market update, we have Stamati Sastra and Manny Frangiadakis. Gentlemen, good morning. Kalimerasas.
Good morning, Kalimera. Kalimera, Manny. I'm very happy we have Manny on the line so he can translate to all of us what the Fed chair, Powell, the president, chairman of the Federal Reserve, what he said to the banking committee this morning. It looks like the market kind of was negative. Now it's like flat. Everything is flat. So please explain to all of us to understand what's going on.
Yeah, so happy to. So right now, we're staying higher for longer. The main message that Powell gave out this morning in his testimony and in the press release essentially was that they can maintain policy restraint for longer if the economy remains strong and inflation does not move toward their 2% target. So for all intents and purposes, what they're telling you is that the conditions in the labor market are broadly in balance. Fed is attentive to the risks on both sides of the mandate, being price stability, the inflation target, as well as the employment rate and keeping the unemployment rate down. Policy is well positioned for them at the moment for risks and uncertainties. The unemployment rate is low and steady. The labor market is solid and not a source of inflationary pressures at this time, and that they do not need to be in a hurry to adjust policy. So essentially, they are not expecting rate cuts in the near future, not to say that they don't take place later this year or beginning of 2026, because everything will adjust with market conditions, in particular if you see a rise in the unemployment rate. Their framework essentially is to review and include and focus on their inflation target, which does seem to be picking up a little bit. That's why tomorrow's CPI report will be incredibly important to see, does an increase in inflation kind of change their perspective. But long-term inflation expectations still remain unanchored, and that they will review and wrap up by late summer. And for right now, the U.S. economy is strong overall. Inflation is closer to their 2% goal than previously, but it remains somewhat elevated. So they are not in the position to lower rates due to fear that they would spark another, run higher in inflation.
Okay, so if inflation stays tomorrow is steady as expected, we shouldn't see any moves. Unless inflation moves up, we should see change, right?
Correct. And in fact, if inflation moves up, I wouldn't be surprised to see if the markets rally and stocks to rally, because if things look like, if inflation's down, that was vice versa. If inflation's down, then you would expect to see stocks to rally, because then they'll give them the ammunition and perspective they would need to lower interest rates. If you get a hot number, then the markets will be sour.
If inflation is too high, they're going to keep interest rates high.
Correct.
Okay. So that's good to know. Different topic. There's a lot of discussion. Again, if you can break it down for us about this Consumer Financial Protection Bureau, and that it was. I think Elizabeth Warren had a lot to do with it, if I'm not mistaken. Correct me.
You are correct. Nope, you are correct.
But if you can explain, what that has to do with our daily lives and our banks, and what are they trying to change there?
What they're trying to change is bring deregulation forward so people could get loans easier, potentially at lower interest rates. And the biggest thing that they're going to go after is high credit card fees. So how does it relate to your daily life is that this administration seems to be putting the consumer first and saying that these aggressive rates that banks and credit card companies and credit agencies have been charging and dinging credit for random things needs to go away, and business needs to be done on a more friendly and easier basis.
Now, forgive me for my ignorance, but Consumer Financial Protection Bureau means helping the consumer. Why they helping the credit card companies? Exactly.
But this is part of the entire DOGE movement. And these are what is, there's there's periods in time where decades seem to happen in a week or in a day, and we're in one of those right now, where we're seeing a huge overhaul in terms of taking a look at what takes place into government, bringing down unnecessary spend, and looking at bringing forward a very pro-business economy.
Okay, so that's and it looks that is happening, right?
It is. I mean, look, I think it's, this all started. This is a massive movement that's taking place, and it's not just taking place here, but it's taking place globally. And a lot of citizens are now on notice. And this actually all started in Argentina with Milei, because if you looked at what he was able to produce in terms of increasing their economy, strengthening their economy, and lowering inflation, all by taking a look at government bureaucracies and unnecessary spend, he has started a domino effect that has just not spilled over into the United States, but it's happening now across the globe.
Yeah, and it doesn't have a negative effect, because a lot of people say someone's cost is someone else's revenue. So if you cut all this money from the economy, you're going to bring a lot of businesses down.
Yeah, but it could increase businesses by allowing, deregulation and more pro-business type policies. There is a lot of waste that's taking place, and that is what essentially we're looking at from that standpoint. Don't forget, the other biggest impact that would happen here is if this all took place, you're talking about lowering deficits while potentially keeping, taxes lower, which is something that has been hard to figure out for a while. And that would be massive deflation across the globe. And that would allow people to lower interest rates and allow for a better economic period of time to continue. And look, this could be very bullish for stocks, because to your point, that's more money if you have in your pocket that you're now spending in the real economy.
Okay. Now, another topic, different topic. This guy, Elon Musk, is all over the place. He's cutting USAID. He's cutting the Consumer Financial Protection Plan. He's cutting everything. In addition to that, he wants to buy OpenAI for like $100 billion.
Mm-hmm.
Can you? What's going
at
on?
The end of the day, we'll see what happens there. But, obviously, I think people that have been paying attention know that, Elon Musk has a pretty big feud going on with Sam Altman, who is the CEO and founder of OpenAI and was part of the original.
They hate each other.
Yeah, exactly. So, I'm not surprised that he's also throwing tape bombs, being in the position that he's in. Because don't forget, Sam Altman was the one who was saying this was going to be a nonprofit-based company and then tried to change that. So
it's true that they were co-founders together.
Correct. Yeah, so Elon Musk was one of the original seed funds going into OpenAI and its creation. Had a really negative.
It was supposed to be non-profit.
Correct, and now Sam Altman wants to make it, for-profit, which has its own issues in terms of conducting that. Because at the end of the day, I think Elon lies in the camp that this is the technology that should be used for good, should be regulated, and make sure that there's not bad sourcing that goes into AI and the input that it could create. And the fact that this should be something that benefits humankind and is available to all people, and not for those that potentially can afford to spend to have that level of technology. Okay,
and in the midst of that, you have the European Union having an AI summit, and they were talking about policy, a very different point of view. They're talking about nuclear infrastructures and how the government is going to take over. It's like, apples and oranges, like talking about different things.
Well, to be honest, it would have been similar conversations here if the election went the other way.
Okay.
So I think the European Union will eventually catch on, because if not, they'll be left behind by the rest of the world in terms of their compute power that will be driven by artificial intelligence.
Interesting. Manny, I had a question I wanted to ask you this morning. Once we heard all about these tariffs going on with the steel and the metal, does that mean a company like Alcoa, who was a U.S.-based company, I think, is showing up good, is showing up green on the sheet today?
Yeah, I mean, look, at the end of the day, that just means you're incentivizing for local production and local distribution versus importing from China, because this started the previous administration, where Trump essentially said that, China was dumping all this steel and destroying our steel industry. So this is a way to protect U.S. companies in a global effort. And in fact, I think, these tariff tape bombs are starting to lose their muster because stocks are now acting positively as soon as we have a news on tariffs compared to what was taking place about 2 weeks ago.
I'm curious, do you know, or can you look up, a company like Alcoa, steel-based, steel, U.S. Steel, are they, what has their performance been in the last year or so? Are they up?
Well, I got to pull it up on my screen now.
There you go.
They're down on the year.
They are.
On a one-year basis, though, they're up 35%. So when you say year-to-date, that's January 1st of 2025 to present. But if you looked at, February 11th of 2024 to February 11th of 2025, it's up 35% in terms of the stock price.
That's
Look, at the end of we've talked about this. We said that, this is where you're getting ready for what looks like a peak up in commodities. And I think that's going to be across the board. I mean, copper's looking like it's going to break out. You have gold that is just absolutely marching higher every single day, and it's probably going to hit 3,000 in the near future. You'll probably have some consolidation, but there is going to be a massive move in commodities. Potentially maybe not as much in oil, but across the agricultural products and the metals, I see it as a pretty bullish environment.
Yeah. So does that mean that you and your colleagues are looking into these options?
Mm-hmm. Mm-hmm. We have an investment committee within 12 Points. We have our chief investment officer who's got 37 plus years experience across Wall Street. So we have our ideas, and we're long-term investors, so we don't tend to make moves on short periods of time.
Right.
So we kind of have what we think is best in class and what we think would act well in the portfolio in terms of the overall diversification and makeup.
All right. Closing comments on the economic side before we congratulate the Philadelphia Eagles?
I'll give one hint to the audience, and this is not financial advice or anything like that, but one interesting sector to be able to look at would potentially be gold miners, as those haven't played as strong of a march as the metal itself, but these companies now. Operate at 40% margins. Mm-hmm. They're great brands, and they could have some serious upside over the years to come.
Mm-hmm. What kind of companies? I mean, can you name some specifics? I know
I can't give you the secret sauce, Teddy.
Can't look into that crystal ball anymore. That's it. Always some great information today. Manny, all in all, and in your line of work, I think you see things under this current administration, definitely pro-business. So for your line of work, that's a good thing? Is that?
Yeah, look, I think, there's opportunities ahead, and I think, look, we can't really dictate what the stock market does in the short term. But you could be looking at, hitting some new all-time highs in the indices pretty soon. You can't discount the advancement that artificial intelligence is going to provide to businesses. So overall, I think we're in a pretty positive environment. And let's just hope that we continue to combat inflation, as we know that affects a large portion of our population. And the dollar is not moving the needle as much as it once did because of inflation. So I think if we can get that under control and, we move forward in a much more economic friendly environment, I think, for all intents and purposes, it's pretty positive, leaving political beliefs aside. And that's the biggest thing to say. It's like leaving political beliefs aside. I think we're setting up for what could be a positive environment over the next couple of years. Look, will there be volatility? Absolutely. Yeah, but looking down the road, pretty positive.
The glass is half full. It is not half empty. That's what I like. All right. Philadelphia Eagles, congratulations. What a pounding. What a defense.
Yeah.
Impressive.
Unbelievable.
Impressive victory.
Unbelievable. Yeah. So happy to see it.
Yeah. I think
congratulations to the Philadelphia Eagles and their fan base on securing another Super Bowl title, but they did it in style.
Yeah, and that was fun. They sure did. 12 Points Wealth Management. Manny Frangiadakis joins us each and every Tuesday at 11 o'clock with a weekly update. Manny, thank you so very much. Looking forward to seeing you very soon, and enjoy the remainder of your afternoon. Stamati?
Thank you, gentlemen.
Thank you as well.
Thank you.
Thank you.
Thank you.
Thank you. All right, we'll be right back after these messages. Don't go anywhere.